Hi, this is Shaumya Sarkar from Wealth Redefined. I recently met a few clients about SIP investments and everything. So I met a very interesting client who was doing the SIP since 2021. What happened is that when the market fall in 2022, he stopped the SIP thinking that he should not buy because market is falling and he may not generate the return. And what it did is that after 2023, when market again started going up, he started his investment. And when there is a last year when the market had fall approximately in October, November time, then he again stopped the investment. And there is another investor who is similar to him who started the investment and continuously was in touch with us. And he has continued with investment for a very long period of time, did not stop anything, same time, same thing. But if you look at the return of them, there is approximately 5 to 6% difference in the return. How it has happened? It has happened because the person who is doing by himself has stopped the investment when actually he should have not stopped. Because when the market fall down, that is the time you get the maximum number of NAVs, because the uh, the units gets NAV gets cheaper and you get more units. But what happened is that when the market fall, his previous investments are coming down, and that is the reason he stopped the future investment, predicting that it will come further and he may lose the money. So these are the basic problem with an investor who is trying to do it by himself without taking any professional help. What happens usually? I have noticed 4 or 5 reasons for it. Number one reason is that they usually try to chase the best performing fund based on past performance. Suppose a fund is very expensive in terms of price to earning or price to book value or whatever it is, but they will try to get that fund because that fund has performed in the past. So this is one of the major mistake I have seen. Second thing is that because there is no professional help or anything, they stopped it at when the market actually falls. So like it is like a that when you are not consulting a doctor, you may stop your medicine at any point of time without knowing it. That is the reason that why people do not make the return, and later they probably see that their returns are less than the market return. Holding the underperformance fund for a very long period of time, because they bought the fund on based on the past performance, so they try to hold that fund expecting it to perform again for a very long period of time without knowing what is going on the fund. So the fund, when it comes to the first quartile to fourth quartile kind of a time, then when the then they start getting frustrated because some other funds are already in the first quartile. So they started frustrating themselves, and then slowly, gradually, they started either stopping the SIP or getting out of the market. So these are the reasons. Another reason is that ignoring the portfolio balance. Some people I have seen that they're continuously putting money into the mid cap and small cap without knowing the risk associated with it. Mid cap and small caps are very high risk funds, but because they were generating returns, so they kept on putting money into those things. Last year, when there is a fall happened in mid cap and small cap, they actually scared and stopped investment into it. So there must be a proper portfolio balance which needs to be. Also miss the opportunities of a tax saving. Suddenly they buy some fund, book some funds. Another mistake which I have seen is that they do not hold the winners, they hold the losers. Most of the time I have seen that people which funds are doing well or expected to do well and generating good profit, they try to encash the fund and they keep on holding the underperforming or loss making funds, expecting that it will make up and they will make a good money out of it. So it is like that you are letting your best teammates going away and holding to those teammates who are actually not performing. So these are the few mistakes which is there. Now how you can rectify it? I think the best way to rectify is that taking the professional help on it. Because when you are taking the professional help, when you are asking probably the knowledgeable, or if you have enough research by yourself, then probably you will continue those funds with an understanding that this fund is going to perform for the next, and you will keep on holding those funds. and you will get rid of those funds which are not performing. And these are the things where you can actually make the money. So understand one thing, that it is not always buying the right funds at the right time. It is also to buy right funds, right time, with right mindset. Because when you are building a good amount of AUM or good amount of portfolio for yourself, you need to hold those funds for a very long period of time. And that fund must be performing and beating the benchmark. These are the things where a professional help can help you and probably generate a very, very good and create a generational wealth for your lifetime. Thank you for watching this video. This video is not for any purpose of buying and selling of any securities or mutual fund. This is just for educational purpose and knowledge sharing. Please do not invest based on this video. If you have any queries, kindly send us the details. We will definitely address those queries. Please subscribe to the channel and like the video if you want. Thank you.